Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Kim Sei-wan, professor of economics at Ewha Womans University. Professor Kim, good afternoon. Thank you for coming on today.
Good afternoon, Devin.
Well, the markets on Wall Street reopened on Tuesday after the Labor Day holiday. The coronavirus is still spreading all across the U.S. Especially a concern for investors is the Delta variant. Stocks were mixed on Tuesday with a gain for tech shares on the Nasdaq. What's the story in the global markets?
In Tuesday's market, U.S. Dow Jones retreated with negative 0.8% return, but tech-heavy Nasdaq Composite increased by 0.1%. U.S. investors worried that the spread of Delta variant will weigh on U.S. economic growth. Also, emerging evidence suggests that the U.S. economy is losing steam as the summer winds down, with consumers pulling back, employers easing up on hiring, and business adapting to changing health requirements by government. The market situations after Labor Day over this week and next week are likely to set the trend of the market. All European markets dropped yesterday as fears on Delta variant and slow economic recovery dominates the market. U.S. FTSE index dropped by 0.5%, and German DAX index also dropped by 0.6%.
Well, also because of the Delta variant, a possibly shrinking stimulus program and weaker consumer spending, Goldman Sachs has lowered its growth forecast for the American economy this year from an annualized 6% now to 5.7%. Many others share those concerns. Tell us about that and what you make of their forecast.
IMF actually this year U.S. economic growth forecast is about 7%, which is one of the highest in decades. Earlier this summer, many economists saw the week of the Labor Day, which is this week, as the moment that economic recovery would kick into higher gear. Their expectation was that widespread vaccination would ease labor shortages. But the U.S. economy is facing a slowdown in September rather than the takeoff once hoped for. Particularly, I think the August employment situation was really disappointing. U.S. economy added 235,000 new jobs in August, but it was only a third of market expectation. We say that to maintain U.S. economic recovery momentum, it is important to add at least over 700,000 new jobs every month. So developments of September employment situation will make us to see more clearly U.S. economic recovery situation and U.S. Fed tapering timing.
Well, today in Korea, stocks were down across the board. That was the case for almost all the country's biggest companies. A really hard hit, though, were the big tech platforms like Kakao and Naver. What's going on there?
Domestic markets heavily declined today. Kospi dropped by 0.8%, and Kosdaq also dropped by 1.6%. Recently in domestic markets, we do not see clear direction with more ups and downs in the market. In these circumstances, the higher possibility of economic slowdown in major economies, particularly United States, dragged down domestic investors' psychology today. In investor-wise respect, foreign investors led today's market drops with 280-some billion won and 183 billion won net sales in Kospi and Kosdaq respectively.
Well, zooming out a bit, the Korea Development Institute, or KDI, has released its report on the economy for September, which reflects some growing uncertainties. Back in June, it saw the recovery going ahead quite strongly, but has since changed that view somewhat with the resurgence of the coronavirus since July. What do you make of this report, Professor?
I pretty much agree with KDI's report that the economic recovery could be delayed due to Delta variant spread. It is the second month in a row that KDI has warned of growing uncertainty over the fourth wave of pandemic. According to the most recently report of the KDI, which is state-run think tank, Korea's economy is under pressure over growing headwinds as a recent spike of COVID infection is likely to delay a recovery of domestic consumption. They say that the nation's economy is on the recovery track, of course, because of the strong export, but the toughest virus curve may dampen improving domestic consumption, which covers almost 60% of the GDP.
Well, finally, Professor, the persistent weakness in the job market. A survey of Korea's 500 biggest companies by the Korea Economic Research Institute shows that only 3 in 10 have plans to hire people in the latter half of this year, and the rest are either not hiring or haven't decided yet. That's actually fewer planning to hire than we saw in the first half of the year. So this is not great news for job seekers, especially young people. What's happening in the job market, Professor?
In terms of the unemployment rate, Korean young workers in their 20s, employment has been slightly improved from 10% unemployment rate in January down to 7% level unemployment rate in July. But it should be pointed out that still it is one of the highest young workers unemployment rate among OECD member countries. Given this unsatisfactory situation, 7 out of 10 big companies either have no hiring plans or have yet to finalize them for the second half of this year. According to a survey of Korea Economic Research Institute, which is a big corporation association's think tank, Korea's top 500 companies show that 55% have not yet been able to devise hiring plans for the second half. Some 13% said that they would not be hiring at all due to the coronavirus pandemic. Only 1/3 have definitely decided to hire new people. So it is highly recommended that in the short run, government should be supporting young workers through microscopic fiscal expenditure. And in the long run, government also should help companies to generate more decent jobs.
Right, and we have seen some plans rolled out already in that regard. Professor, we'll have to leave it there for today. Thanks so much for sharing your insights with us. We appreciate it.
Thank you very much.